Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is trapped in between two quite important structural levels. In fact, what we can see is that here at the top, we have a quite strong resistance zone, which already has been tested and rejected to the downside multiple times. However, at the same time, here at the bottom, we have a quite strong support and demand area, which again, also in this case, has been tested multiple times and rejected to the upside every single time. So in a situation like this, clearly from a monthly standpoint, we have a ranging market and a market that essentially is trapped in between these two quite important support and resistance levels. And until the market will remain in between these two areas, we could simply expect more horizontal price action to be created here for this market. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can notice how the market is in fact testing a quite strong structure level. This zone was previous weekly support, acting still as support here, which the market then broke to the downside. And all that previous support was turned resistance here, again resistance here, but now the market has broke back above that zone. So this previous resistance is now turned support. And in fact, we can notice how the market has just tested it here as support. It seems ready to reject the level to the upside. So this means that there is a possibility now for the market to want to go and test the high of the monthly range that we have just identified on the monthly time frame. Dropping down the daily time frame, what do we see? Now, from a daily perspective, I have spoken about USDCAD quite a few times in the past. In the very last analysis, I explained all the reasons for which from here we could expect first the creation of this move to the downside, and then from here the creation of a new daily higher high. And in fact, that is exactly what the market gave us. And by the way, I will link in the description those previous analyses so you can go and check them out for more free education. However, at the moment, from a daily perspective, we must identify the new patterns that the market has been creating. And in this case, it seems like if from here the market will continue lower, we will have the creation of this M pattern. And as I explained many times, after the creation of an M pattern, what you would expect is a potential push higher. For the completion of the M pattern at the neckline, therefore the previous support turned resistance from a daily perspective in this case. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so what hedge funds and the big players in the market are doing, and we check the data precisely for the CAD, the first thing that we have to keep in mind is that if we're checking the data for the CAD, we're actually already looking at CAD USD because all currencies on the spot are traded against the USD. But since we're analyzing USD CAD, we simply have to reverse everything. And what we can notice here is that with the last reports on the CAD, we have seen a slight increase of the net positioning going from minus 7.7K to minus 5.4K. So this shows how institutions are slightly moving back to the bullish side for the CAD, meaning to the bearish side for USD CAD. So we have to be extra cautious in a situation like this. However, we have a new report which is coming out tomorrow. And since we have now broken above the resistance, there is the possibility that we will start to see a new decrease of the net positions for the CAD, meaning that institutions are moving back to the bullish side for USD CAD. Now, if that will be the case, and if we will have the creation of this M pattern, a at that point, we definitely have good probabilities of getting a potential push higher, completing the M pattern at the neckline. And by the way, make sure that you join my free Telegram channel, which you find linked both in the description and here on the screen, so you never miss new updates. Now, as I was saying, continuing with the analysis, here from a daily perspective, if the market will actually create this M pattern and if we will see more institutional shorting of the CAD, so decreasing of the net positions, meaning longing of USDCAD with the new report coming out tomorrow, at that point we would have good probabilities of getting this potential push higher, completing the M pattern at the neckline. So if we have the creation of this M pattern, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential push higher, completing this M pattern at the neckline. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.